Hey, Bulls and Bears, it is Monday, December 19th, 2022. Thanks to everybody for joining me here today. Now, yesterday I did an outdoor video. You might have heard it in my voice. My voice is a little bit sketchy today as well. Actually, went to a concert at a small venue on Saturday and kind of lost my voice. Went a little bit crazy, had a little bit of fun. Didn't even drink, but had a lot of fun just talking to people over the music or trying to talk to people was messed my voice up pretty bad. So this was a small venue in Ramona, California. I'll talk more about that at the end of the video. Let's talk about the housing market news that's out today, economic news, but most importantly, the housing market. Demand remains very weak. That's what's being said by industry insiders. Now, we've seen mortgage rates drop for 5 weeks in a row now, but it's not bringing demand back into the housing market. One, people are scared. They're afraid prices are going to go down. They're afraid mortgage rates are going to go back up. But even with 5 straight weeks of mortgage rate declines, the volume is not coming back. Buyers are not coming back into the housing market. There's a lot of fear out there right now. And let's jump over to that just for a minute. How much fear is out there? Roughly 1 in 3 workers is worried about a layoff. So worker anxiety is close to the highest that we've ever seen based on these surveys that just came out here recently. Let's take a look here. 31% of workers say they're concerned the company is planning budget cuts and or layoffs, according to a recent LinkedIn workforce confidence survey, which includes data from 21,000 plus professionals for this past few months. So this is big, and you're going to see this in the housing market. You're going to see this with automobiles. We see automobile prices still coming down very slowly because interest rates are basically causing the payments to be higher than when vehicle prices were higher. So even with lower automobile prices, because of the higher interest rates, vehicle payments are higher. But we're not seeing that big spike in interest rates like some people had predicted. Remember, people predicted the housing market was going to crash. I said, no, it's going to be more of a slow motion decline because the powers that be, the central bank, they're not going to let mortgage rates just spike to 7, 8, 9, 10%. In fact, this week we saw the Freddie Mac mortgage rate drop down to about 6.31%. Remember, they hit over 7% briefly. But yeah, just what we said was going to happen. They're not going to let the markets crash unless we see something absolutely break. I don't think we're going to see any market crashes in the stock market, the housing market, the automobile, used car market. I don't think it's going to crash, but we're going to continue to see this steady decline as consumers get further and further into financial no man's land. And we're already to the point where there's got to be a bankruptcy tsunami that's going to hit, I think, in 2023. Probably towards the middle of 2023, you're going to really start seeing the spike, especially when, and I think it's not if, but when we see gas prices start to go back up significantly. And I think we're going to see more cuts out of the OPEC nations, the Organization of Petroleum Exporting Countries, OPEC. Trying to remember the acronym for a minute there. We're going to see more cuts out of them, and we're going to see rates, not rates rather, but oil go back up. Of course, gas prices is going to go back up. With that, we're going to also continue to see disruptions in drilling and transport. So keep an eye out for that. But let's get into some other news here. Now, with the consumer being the driver of the U.S. economy, sadly, it is people taking on debt that is chalked up as economic growth. I think most of you know that by now. Most of GDP is consumers swiping their cards, going into debt, taking out loans. But once that debt game stops, once people can no longer keep up with their minimum monthly payments, which is happening more and more now, then the ball game begins to come to an end. And Bloomberg put this article out today. Highest interest rates in 15 years are derailing the American dream. Consumers who were not able to make ends meet are just digging themselves into a deeper and deeper hole. Doesn't that sound like what we've been talking about here for the last couple of years? How long can consumers stay above water when the cost of living keeps rising? Even though they told you inflation dropped, remember, prices are still much higher than they were last year. Prices last year higher than they were the year before. Just because you see a temporary dip in the rate of inflation doesn't mean that things are getting better. It just means that prices are going up at a slower rate, right? So what they're feeding us is absolute nonsense. I think 99.9% of you here see exactly what's going on. You're not buying into the bull. You're not buying into the nonsense. But yeah, good Bloomberg article telling exactly what's going to happen. The question is, how do we prepare and when does it hit? Well, it's hitting now. Just most people aren't going to tell you that when you're talking to your relatives and even your friends. Are they going to say, oh, by the way, we're so far in debt, we're considering bankruptcy and we're robbing Peter to pay Paul? It's not the first thing that people are going to admit to of their financial distress, right? It's a very, especially for the head of the household, it's a very hard thing for people to talk about. Like a lot of people have pride; they don't want to admit that they're having a hard time financially, and that's natural. But I think most people now are going to have to face reality, and the piper is going to need to be paid, and it's going to be something that people are just going to have to accept and talk about here as we go into this, because there's no Superman. There's not going to be any rescue programs that are going to be able to engulf all this financial stress and strain that people are going to. 1 in 3 people are worried about being laid off from their job. It's just going to continue. Home prices continuing to soften, and listings are declining when it comes to existing homes. Now, we're not seeing this big spike in inventory like some people had predicted. So we're not seeing home sellers get that desperate yet, where we're seeing tens of thousands of homes get listed every month like we did back in the 2007-2008 housing bubble. Prices are coming down just as quickly as they did back then. So it's interesting. It's an interesting dynamic. We're not seeing inventory spike like we did back then. New homes, though, we are seeing a rapid increase in new home listings because home builders, more than consumers, they see what's coming on the horizon. They see the drop off in demand, and they also see investors dropping off too from buying homes. So new home builders are trying to get these homes on the market as soon as possible before things continue to soften. All right, so let's switch gears a little bit here. Oh, what happened to my lights? You guys didn't notice my little Christmas tree back here. My lights just went off. Oh, there we go. Okay. Let's switch gears a little bit. You see I'm bundled up. It was actually in the 30s here this morning. I was up in the 6 a.m. hour, and it was about 35, and that's very cold for California. We're not used to that type of cold. And some of you are watching this up in the north right now where it's probably below that. It's probably 0 and sub-zero temperatures from what I've been reading in like upstate New York and stuff like that. So hope you guys are doing well, and I hope no one is getting their heat cut off because lack of heating oil. But let me know how you are doing. Every one of you, or those that have the time to make a comment, are you doing better now than you were 1 or 2 years ago? About the same or worse? Now, most of you said you were going to be cutting back on holiday spending when I had that survey, about 2-3 weeks ago. So I took that as most people are kind of feeling the crunch and feeling the financial pinch. Myself, I've been very careful and cautious on spending. We're trying not to take vacations as a family. We took a little birthday trip up to Orange County for one of our kids, a little amusement park. But besides that, we haven't really done much extravagant spending, not really much entertainment spending. I did go to a concert. My voice is still not recovered. It wasn't really a concert. It was a small club in Ramona, California. It's about a 30-minute drive up the mountain here. And my friend is a vet, and he got these discounted tickets through something called Vet Tix or something like that, where he gets like a very good deal. So it was like a $8 concert, right? So I don't spend a lot of money on entertainment, things like that. And for those of you interested, I saw, if you're curious on who I saw, it was a guitar player named Gary Hoey, and it was really cool because he plays Christmas music, but he does it in like a real hard rock, heavy metal type of thing. And I know that's hard to imagine. You can find the songs online. Gary Hoey, he spells the last name Hoey, Gary Hoey. And he's a guitar guy, but it was really loud and really cool. And the YouTube videos doesn't do it justice. It was just, in real life, real concert terms, was awesome. So back to the spending thing, that's about the type of thing that I do. I don't really spend too much. I'm not going to spend $100 to go watch the Eagles or some, worldwide famous artists. You know what I mean? So trying to be cautious, right? But people, friends and family of mine actually no problems at all. They're traveling a lot. They're buying new vehicles, new houses, some of them. And I'm, sitting back here and, with my old car, being cautious and trying to prepare for what's coming. But I also have kids to think about, right? Some people that don't have kids, they may not care as much. So I'm being cautious because I see what's coming. I see what's headed down the road towards us, and doesn't look pretty. And I thank everybody here for watching this channel, for supporting me through your tips and just through your kind comments and just for being here. Thank you very much. And I'm going to do some shout outs probably in my next report. Hope everyone of you watching now is here for that next report. Please stay tuned. Keep stacking, everybody. Hope you're well. Happy holidays. Bye for now.